Gold prices were bid early Wednesday, nearing $14.80, the highest in almost 2 weeks. And at this point, the market seems comfortable in that $14.60 to $14.80 range. And that's where the market trades as we speak, because not only did it go up this morning, it comes back off later today. Obviously, the whole idea that these China trade talks and the Fed staying on hold and the need for insurance seems to be diminishing here quite a bit. And I don't know if that's true or not, but that's what the market is sort of telling you. It's giving you some signals here. Gold prices aren't moving up. They're not spiking higher. We're moving up quietly, and obviously we've made a pretty big move off those recent lows, but things seem to be stalled here for a while. It's going to take some kind of catalyst event or some kind of repricing in order to see gold prices get back up to 1,500. And yes, there are some events coming next month that could do just that. But obviously right now we have to get through the next week and a half to 2 weeks before we see those events. So gold prices right now comfortably sitting roughly unchanged from Tuesday's trade, right around 1474. And I think at this point, the market seems very comfortable in that 14 to 60, 14 to 80 range. And what is the propeller of trade? What has been the propeller of trade? What has been the motivator of buyers and sellers? China and the China trade deal. It continues to move markets. Today we heard that they may not get a deal signed, phase one deal signed by the end of the year. That seemed very iffy to the markets. And then, of course, we heard from President Trump's deputy press secretary saying that talks are progressing. So it's going to be a continued back and forth. This is the headline that just won't go away and continues to move the markets. The stock market's gotten a little smarter, I think, than the bonds and the gold markets, and it's not seeing that type of knee-jerk reaction that we've saw maybe a few weeks and months ago. But at this point, in order for any sort of China trade news story to be the it story that propels gold, it's going to have to be no deal in place. At least the beginnings of that type of talk, and we're not there yet. And lastly, we did get the FOMC minutes today. The Fed, obviously a big player in the gold market, or at least an effector of it. The Fed is on hold so they say, for the foreseeable future, and that looks to be the way it is. Fed fund futures are priced out for another rate cut, not till the middle of 2020. So they're not going to see that end of year rate cut, possibly with a follow up in quarter one. But at this point, gold prices need that type of Fed dovishness. Ultimately, it's going to take some kind of a surprise event, I think. And maybe if the Fed comes in at the end of this year and talks about cutting rates in early 2020, that would be a reason gold will go higher. Likewise, I think if the dollar continues to get hit and we start to see some hiccups in the U.S. trade China deal, that will also add to it. So right now, gold's kind of sitting in a range. Look for 1460 to 1480 to hold until and unless there is one of those catalyst events. We just didn't get it today.